Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, August 4th, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today on the markets, first what we have finally the Greek stock exchange that opened. A lot of Greek stocks took a big hit. For instance, I'm taking a look here at National Bank of Greece, NBG, on New York, which has pursued its decline. It was yesterday that the Greek stock exchange opened after several weeks of closing. We also had another news on China here, where the Chinese regulators, what they have said is that they say that they will tighten the rules for short sellers, which means that people who are shorting some stocks on the Chinese stock exchange, well, they will not be able to close or to buy back their short positions during the day. They'll have to wait at least 1 day, and that's a measure to actually make sure that we don't have a wave of panic that actually have bring the Hang Seng Index towards its low here on July 8th. Now, if we take a look at the situation of the markets, though, where are we right now? Well, we are actually in a situation where markets are neutral. It's tough to tell what's going to be the next direction because, look, we still have this neutral range here on the SPY. We still have this neutral range here on the NASDAQ. On the Dow Jones, a slight decline there because on the Dow Jones, we had Apple. That is actually, if we take a look at Apple, that stock is APL is pursuing its decline. It's a stock that we still have in our analyst shares portfolio because it is still continuing to maintain this long-term upward trend. However, we're close to potentially eliminate or close totally that positions on Apple on marketgurus.tv, but we're remaining a little bit more patient because we don't want to rush or move on Apple. It's still a company that makes money, that we're collecting some dividends in our portfolio on marketgurus.tv. And those of you who have followed our advice when we recommended Apple as a buy, well, you're still making money by collecting those dividends on Apple. So this is something that's actually make us be a little bit patient before closing that position. Concerning the sectors on the TSX, though, we have one particular sector that is standing out. It's the consumer discretionary sector. Not a lot of breakouts in the sector except for Dollarama, which today is a clear breakout. Really a nice buying signal there for Dollarama. Exit point $75 on the reversal of this upward trend. But most of the other stocks are still either rebounding or pursuing the rally. We know Thomson Reuters rose here on their earnings. Now it's a pursuit of the rally. Magna International as well. It's not a breakout, but mostly a continuity of the bullish cycle. Concerning the energy sector, we have oil that is having a rebound after taking a big hit yesterday. But energy stocks so far continue to remain weak. There's some laggards, which means stocks that are again breaking down today. But it's tough to tell what's the potential of the energy sector. Are we going to go down again to come to retest the low of this downward corridor? How far would oil prices go to help the energy sector pursue its bearish momentum? This is why I think that today, on the new breakdowns that we have in the energy sector, such as Nuvista Energy, such as Canacol Energy, I find those breakouts a little bit too late. I think that right now, that would be a situation where potentially you should, well, for instance, Canacol Energy is not that bad, right? But actually, it's below $5, so forget about it. It's not a nice short. Veresen could be a nice short opportunity, but Veresen, look at this. The stock on a yearly basis, it's so oversold. Yes, we broke an important support on a yearly basis, but look, we had a lot of false signals on that stock there. So how far could we go on a stock like Veresen? I know in the short term we still have some room to go because we're just on the overbought situation and the oversold situation is around here. But I don't know. I'm kind of doubtful that really Veresen could pursue its bearish momentum with so much strength. So therefore, on stocks like that in the energy sector, yes, they're going down, but I think the people who are well positioned in the energy sector, or people who have already shorted the energy sector a couple of weeks ago, a couple of days ago, right now you're really in a situation where you could take some profit, because with oil that took a big hit on Monday and that is rebounding today, I definitely doubt that oil can actually pursue its bearish momentum. And I think the strength of the quality of those breakdowns will be determined by how far that oil prices can go. And I believe that it's more on the upside eventually that it's going to come up with. And if we take a look at natural gas, we still have this neutral range that persists on natural gas. So far, as long as we stay within this upward triangle corridor, there's no HNU or HND that should be bought on natural gas, because we continue to be totally neutral. So welcome back, folks. So we have one question here from Bear about HVU. So HVU bought at 303. Where do you see support and when to call it quit? Thanks. Well, HVU, it's a dilemma that we also have on MarketGurus.tv, because it's an ETF that we still have in our analytic shorts portfolio. Now let's take a look at HVU here. I want to show you the intraday chart on that graph. So look at this. We do have what's called a bullish divergence. Why? Because look, we're making a new low here today on HVU, while the stochastics is confirming a higher bottom. So this low here, we were there, and this one here, which is lower than that bottom here, the stochastic is higher. So that confirms a bullish divergence. That confirms that there's a probability that HVU might rise. So therefore, for us, it's kind of tough to say, should we get rid of HVU? Right now, I think the indicator, the signal that we're waiting for to get rid of HVU is to see what's going to happen in the market. Especially we want to see the SPY at least confirming a short-term breakout heading towards 213 with a lot of strength, with a lot of sectors that are starting a bullish cycle. So for if we take a look at the SPY, we see all this congestion here on the SPY. It's tough to say what's going to be the next direction on the SPY so far. So therefore, I would remain patient on SPY, on HVU. I would hold on to my position. I've shown you the bullish divergence that could allow the ETF to go up. But really, what's going to trigger our closing of that ETF in our analytic shorts portfolio on MarketGurus.tv is to take a look at the direction of the SPY. And if ever we have the SPY that can go above 211 points with a lot of sectors starting a bullish cycle in the US, well then we might actually close HVU, but so far we're remaining a little bit more patient. Now Bear has a question here on POW. What scenario would you like to see develop to go short on POW, and at what price? Well, POW, just like the financial sector, if we take a look at this, is also continuing its bullish momentum. So the financials, the consumer discretionary sector are two sectors that are helping the TSX stand out compared to the American indexes. So the TSX is really consumer discretionary and financial. Now for POW, look, the rebound continues. Look at the MACD here. We still have a wave of buyers that's there. The 933 stochastics is also showing us that. Now POW still has this downward trend that is maintained. Now, what's my strategy on the POW? What scenario would I like to see develop on POW? First of all, I'd like to let this rebound continue. Let POW hit 31.94. 31.94, it's an important point. Why? Because we have this 200-day moving average, this 50-day moving average, and almost this 100-day moving average around 31.94. 31.94 also corresponds to this downward trend. So if ever POW continues, come and test 31.94, stabilize, and show some bearish momentum, that would be a nice point to short POW, and your target will be for the low of this downward corridor towards 29.50. So around 31.94, 31.80, 31.90, I think that's the point where you should watch POW. See if ever we have an installation of a bearish momentum on that stock, which means that if ever you have a stochastic around 31.94, that's around there, and that starts to go towards the oversold situation, that will be the signal, and you'll have a target towards 29.50. And I definitely think that we could easily reach that, especially when we have all those moving average, 50, 200-day, and 100-day moving average that are meeting at this point. And I think this is definitely the point where we could have an end of that rebound of the last few days. Now, Pat Bear about HGD. You bought at 1874 this morning. Where do you see pivot point? Well, HGD, it's with gold. So far, I think you should purely stay technical. Look at the graph. You see that $17 path. There's a clear support there because every time we have tested $17, the ETF has rebounded. We still have some weakness on gold. Look at the gold sector that is testing its support. Barry Gold is testing its support, could break down. Alamos Gold testing its support. Agnico Eagle, which is our analyst source on marketgurus.tv that we have recommended as a short around here on the gold sector. While we continue to hold on to that short exposure, we are having a target around this point here, 25.60. This is going to be the point where we're going to close totally that short positions on Agnico Eagle. So therefore, we still have a bearish view on the gold sector. And I think that if you bought HGD, which is a good thing that you did, you should hold on to it. $17 for me is the clear exit point on HGD. You bought within this sideways formation, which is a good thing. Now let's hope that we could have a wave of buyers that could bring HGD back up, which means that the gold sector and stocks like Barry Gold will need to confirm another breakdown for HGD to pay off. But so far, it's a hold. Stop loss, $17.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. One questions here from Dan. Good day. July 24th, I bought 600 shares of SLTD at 438 breakout. Should I put a sell stop hold at 325 or sell now at 381? Chart is trading upward on the short term. Yes, indeed, it's trading upward on the short term. Now, I've analyzed your question though, and let me tell you that there's a 2 things that I didn't like with your timing to get in on that stock. First of all, you got in on July 24th around this area here. On July 24th, the stock has already was surging, was rallying for the last 3 days. So you got it at the 3rd day of increase, which is not something that we recommend on marketgurus.tv. Usually, that stock on marketgurus.tv was recommended on the breakout when the stock reversed that downward trend went on July 22nd. So on the beginning of a bullish movement, this is where you have the highest probability of confirming of allowing the stock to pursue its rally. You got it at the third day. So first we had here the stochastics that was showing us on July 24th that the wave of buyers was fading because the stock was totally overbought, and you got it at 438. Now there's a probability that the stock could continue to go up because there are some stocks that can be explosive that can continue for the last 4, 5, 6 days. There are some exceptions, of course, but now you got it at 438, and look, the former resistance there is at 483. So from 438 to 483, you don't even have a 10% before you can take some profit on a stock like SLTD. So in terms of timing, Dan, it was not really appropriate to get into a stock like that. Now, the situation that we're right now, we're in a situation where it's worrying that you lost some money, but I think your exit point at 325 is wise, and I think this is the point you should respect, because at 325, this is where we'll reverse this upward trend. Now, in terms of the indicators, though, it's tough to tell. Are we going to go further back down, or are we going to have a wave of buyers that will propel the stock back down? Because stochastics is not clear yet. We seem to tilt towards the overbought situation, but it's not clear. So for me, I think with 325 as your exit point, it's a great strategy. Next time you want to buy a stock, Dan, first of all, make sure that first you're getting in at the beginning of a movement. So you can actually try a marketgurus.tv, take a look at what are the breakouts of the day to give you a perfect timing to get into a stock. Second thing you could look for is to take a look, okay, if I'm buying that stock, what's the potential until the former resistance? Try to target at least a 5, 6, or 10%. And also take a look at the stochastics to see if the wave of buyers will be consistent enough to allow your stock to rally for a while and be able to take some profit. So I think you didn't have the right timing, but with your exit strategy at 325, this I approve. Now, Sergio, do you think the stock market will collapse soon? Well, Sergio, it's a big statement you're making. Of course, there's always those events that we cannot predict, but in the short term, I definitely don't see anything that could make the stock market go down. Take a look at every week at marketgurus.tv and also on our Facebook page, we release the earnings seasons. And so far, the earnings season of the third quarter have been really good. You see, 73% of companies have exceeded earnings expectations. 52% have exceeded earnings expectations. That's better than the first quarter, right? In terms of earnings growth, we have 1.3%, so we are better than the first quarter. So really, American companies are continuing to make money. So why should we have a stock collapse when American companies continue to make money? Of course, as I said, there's going to be some events that could happen in Europe and China that could actually bring some fears back into the market. But really, I don't have a crystal ball to determine what's going to be that event. Because with the data that we have, so far we see that the U.S. economy is doing slightly better. Companies are continuing to make money. People are having more jobs. On the Eurozone, yes, Greek took some hit, but they have accepted some reforms and they're following the steps to get access to a bailout. There's a lot of room to go before they have access to that bailout package, but still they adopted the reforms that creditors forced them to adopt. So they did that, which is also a good thing for the long term. So really, there's no news that with the current data that we have that can say that we're going to have a collapse. China has actually made a lot of measures to stop short selling, to make sure that people hold their shares for a longer period, which is also something that will propel the Chinese index a little bit higher in the next few months. So really, I don't have data right now that can give me a clue that we're going to have a collapse soon. So for those reasons, Sergio, I cannot answer your question. Now, you want to buy Apple. Well, Apple, Sergio, I think that it's not a great timing for the moment. The stock is still on the verge of potentially reversing its upward trend. I think I'll wait if ever you see tomorrow that Apple can pursue its rebound intraday wise. Okay, you might give it a shot and your exit point will be clear around $110. You'll get out on Apple, but right now it's only an intraday rebound. It's not strong enough. You need at least a second or third day of increase with an exit point at 110, and that would be a great entry point on Apple, but not for today. Now, as for the day trade of the day, it's that stock here, WWE. It was recommended since this morning on marketgurus.tv. So you had two clear entry points on that stock. One when the stock reversed that short-term downward corridor around here. Stochastics was heading up. Great timing. Another one there on that stock too as well. And now the next entry point is going to be at 2171 when the stock breaks that sideways formation and when the stochastic starts to head back towards the overbought situation. So overall, folks, we have markets that are staying neutral. Not a lot of volatility today. In terms of the sectors, we have some consumer discretionary stocks that are going up, but mostly Dollarama is the best breakout of today. But elsewhere, no sectors is really standing out. You should hold on to the bearish ETF that you have. We're continuing to hold on to our positions on HVU. We could actually have a potential weakness in the coming days in the market, but so far it's tough to predict the next direction of the market because we're totally neutral and investors don't really know which direction to give to the markets right now. So that said, see you tomorrow at 12:30 on the Swing Trading Show, and I wish you all a good trading.